Here are the top few things you can write off as a real estate investor when you have a portfolio. Stay tuned to this week's episode of Prime Properties TV. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you joined me here today. This is the end of tax season. Oh, good God, thankfully it's almost over. Final stretch. But you'd be surprised how many questions I get asked in my day-to-day life, especially around this time when I deal with a lot of real estate in regards to taxes. And the two most common questions I get is one, should I incorporate, which I answered in last week's video. You can check it up here. And the second question I'm gonna answer for you is kind of what expenses can I write off as a real estate investor? So I'm gonna break that all down for you in this week's episode. Remember, everything I'm telling you is not tax advice. This is just me sharing my personal experience with you and also speaking with other fellow investors and clients in my day-to-day kind of like investing life. So without further ado, here are my top 10 things you can write off as a real estate investor. Number one, and the biggest one of them all, interest on your mortgage. So this mortgage component is probably going to be the biggest amount, and you can write off things that are part of your entire mortgage as long as it's generating income. Or this also includes things such as your home equity line of credit, or for anyone who's not familiar, this is what we call HELOC. And interest is essentially any interest as long as it's generated income, right? That's very, very key. It must generate income, whether you borrow that money to generate income, whether it's from yourself or you get it from a different mortgage, right? However, this does not apply if you are using borrowed money from a HELOC to buy a pre-construction since it has no rent yet. You have to capitalize this interest on closing. That topic is a whole thing on its own, but I'm gonna leave it at that. But for you to write off any kind of interest on your mortgage or HELOC, you must keep very clear documents in case you are asked and or everyone's least favorite thing, audit it, and you have to prove the interest that you have earned on it or paid for it, have earned income, and it's related to investment property. So as an example of what not to do is using your HELOC as a portion for family vacation and the other half for investment, and then you mix and match the two. That's a no-no with the CRA, and you're gonna be in for a lot of trouble if they audit you. So I would say keep anything you do with interest or money related in real estate in a totally separate account, even if that means you have to incur some bank fees or split and separate out your mortgage products if your bank allows you to do so. Or, just better yet, don't use HELOC or refinance money for non-income related things. That's just generally how I would do it. But, to each their own. Number two, property management and condo fees. You can write off any condo fees or kind of costs associated with having a property be managed and or looked after by somebody, right? So any condo fees associated with you owning a condo that generates income can be written off. Or the alternative is if you hire a property manager to manage your real estate properties or your portfolio, and those expenses can also be written off as well. Again, keep your invoices and your statements to prove that you paid these fees, because obviously that's very important. Pro tip, if you are bad with paperwork, you can use an app that I use personally myself. It's called Expensify. I'll put it somewhere on the screen here. And Everlance, you can just take a picture of the receipt and put a little note, and you can leave it in the cloud, and you can just print it out for your accountant for bookkeeping in the future when you do taxes during tax season. Number three, accounting and legal fees. This one's fairly standard because any legal fees paid on closing for your investment properties or accounting fees in regards to kind of filing your taxes for corporations or your income or your taxes in regards to income related to investment properties can be expensed. This also includes stuff like bookkeeping software such as QuickBooks, so you can tag them all in and just save the receipts. Number four, property taxes. Oh yeah, this is a big one, especially if you live outside of the GTA. You can write this off as well for investment property. Just make sure you keep the bill from the city, and make sure that's the final bill, not the intermittent bill. Number five, repairs and maintenance. So this one's a little bit confusing, but I'll do my best to explain it for you. Any repairs that are deemed considered like upkeep for your investment property can be expensed. So these are repairs such as kind of like, an appliance breaks or your fridge breaks down, or you need like a handyman to fix something for your tenant that's living there, right? Or even cleaning. Those are deemed regular in nature and routine. So that's kind of what they look for. However, on the other hand, if you have repairs that are deemed to be capital in nature, the rules are different, right? So these would be defined as expenses that are incurred to extend the usefulness of the property of the lifetime of it. So that's what it says in tax words, or basically in normal layman's language, other words, the work done adds some longevity to the rental property, right? So these are things such as, putting a new roof on, right? Or changing the furnace, right? Or maybe even big time kitchen renovations that you're increasing the value of the property to get more rent. All of this will be deemed capital in nature, and you won't be able to write off 100% of this right off the bat because these are not fully upfront costs that can be done that way. But rather think of it as an expense as being written off little by little over time, kind of like an amortization or capital expense. Yeah, this gets confusing if you haven't really crossed this kind of part of your investor life or journey yet. So make sure you go seek an accountant so you don't get confused. Now, if this is the type of real estate content you enjoy, make sure you help us spread the knowledge by smashing the like button and subscribing to Prime Property channel, because every week we make awesome content like this to help you in kind of navigating this real estate market and the investor's journey, because we want to be open and transparent and also share tips with you on how to be a better investor so that whenever you are ready, you can be like, Zhen, I want to buy, sell, or invest in real estate. I'm going to book a call with you for a consultation to see kind of how to strategically plan my next step. And you can do that using the link right here. It's www.chatwithzen.com. Right, back to the list of top 10 things to expense. So your number 6 is insurance, and you generally will need fire insurance on your rental property to get a mortgage. And guess what? You can write that off too. Now, there are specialized insurance policies for like short-term rentals, vacation rentals, which I guess also include short-term rentals. And there's some stuff that protects you from vacancies and also like damages. And you can kind of bulk all that policy cost, which is called a premium, into it and write it off. Because a lot of people want that peace of mind for their investment properties, and all of these can be written off as well. Number 7, utilities and other reoccurring stuff on a monthly basis or quarterly basis. If you're providing an all-inclusive unit for your tenants, whether that be long-term or short-term, you can write off the utility bills generally. And this is kind of your water, gas, hydro, which is actually electricity, not water. I know it's confusing, but it's hydro is electricity, not water. Just leave it at that. Internet bills, phone bills, landscaping, and snow removal, or any kind of other services you may provide to your tenant as part of the lease, right? So including sometimes cleaning. Now, if you have a large enough portfolio and you use software to track and maintain your portfolio, those monthly costs can also be deducted from your total income as well. Number 8, commissions. Any commissions that you would have paid whether to sell a property or lease your property can be written off. It's almost kind of like advertising costs, but you got to be careful because I'm more referring to investment properties, not your primary properties. Another thing you can write off that's commission related is also if you're trying to sell the contract of a pre-construction. How I feel about that. You can listen to my rant up there, but it is totally tax different, but that commission part is deductible. And the last thing I'll kind of point out is I have a lot of clients who buy and sell their primary home with me, and they ask me if that commission is also deductible. I would generally say no, but I know some clients who have done it under kind of the relocating for work and school rule, and you can kind of Google it. It's like 40 kilometers or something. However, a lot of them who have done this were audited, and the results for the moving cost was too large. So do your own research and talk to your own accountant in regards to writing off your commissions for your primary residence. Number 9, advertising. Now, if you opted to kind of lease or sell your property on your own, you could write off any kind of advertising cost associated with the, leasing or the selling of the property. These are things like classified ads, KGG ads. I don't know if you want to put your property on a garbage bench or something, garbage bin or bench, like realtors, Facebook ads, etc. Those things can be written off as well. And my final thing is number 10, travel expenses. Any traveling related to the investment property can be written off. This includes kind of gas for traveling to see your property, maintaining it, inspecting it, and all that stuff. And this is why I personally use Everlance, because it tracks my mileage automatically on where I go. And if you want to start by writing off your car payments, it's going to be a little bit tricky, I would say, because it really depends on whether you have it leased or financed, and that's the first question. Then you get into how much of the user's car for actual investment properties versus personal. And really, it gets really complicated. So I would highly, highly recommend you talk to your accountant on this, okay? Now, hopefully this gives you an idea and gives you some help during tax season. If you are looking for some real estate help in regards to buying, selling, or investing, you can book a call with me using the link right here. It's www.chatwithzen.com. If you're trying to book a call with me in regards to asking me tax questions, please do not do that. I am not a tax accountant. Go get a tax accountant to help yourself because it is not my field. Talk to a real estate accountant. They're going to be able to help you with that. And like I said in the last video, a good accountant is going to save you money and you should probably invest in that relationship. Just don't go trying to fish for free tax advice. They all hate that. And hopefully this gives you an idea of what you can write off as a real estate investor. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.